It's Tuesday, June 28th, 2022. You know, they say by the time you see the iceberg, it's too late. I see the iceberg, and I know most of you see the iceberg. It is too late, America. It is too late for the economy. It is too late for the stock market. We see the iceberg. That means we're already on top of it, and we're about to hit it. And yet, millions of people are in complete denial, don't believe that there's an iceberg out there. They don't believe we've already hit the iceberg, let alone they don't believe that the ship is taking in water. These are people heavily invested in real estate, heavily invested in these markets, heavily invested in cryptos. They have to believe that there's some type of hope out there that this isn't true, that this isn't happening. Ladies and gentlemen, boys and girls, you all saw the iceberg. It's too late now. It's too late for all of this. I hope everybody has been preparing. Dow Jones today down nearly 500 points. NASDAQ down nearly 350 points. Markets across the board all in the red. And what's really interesting is the Dow Jones, when markets opened this morning, was up over 400 points, yet closes down nearly 500 points. This is the real world, ladies and gentlemen. Welcome to the real world. And the people out there that just can't believe this is happening, they're going to believe it sooner or later. But I get it. They have to believe that this is a nightmare because they're so heavily invested in these markets, in the cryptos, in real estate, that they're not even seeing straight at this point. You see exactly now what is happening. We've been talking about this for a few years. This bubble took many, many years to get this big. But when this thing bursts, it is gonna go down so fast. It took a long time to inflate this bubble. It's not gonna take that long to let all the air out. The question is, what kind of damage are we gonna see? The fragmentation, the blowout in the bond market, the stock market, the housing market, derivative market, you name it. Every market across the board is going to be impacted by this bubble bursting or these multiple bubbles bursting. Consumer confidence crashes in June. This really sent the markets tumbling today. The consumer confidence index tumbled in June to 98.7 from 103.2, well below the 100 expected. This largely was driven by a collapse in expectations that was 73.7 and went to 66.4. And as all this is taking place, we're watching these fragile markets, these manipulated markets. We're watching the Fed playing both ends of these markets, buying bonds at one side, and then on the other side, raising interest rates. And while all this is taking place, our lovely governor here in California now is going to drop helicopter money, in fact, $17 billion of helicopter money in this time of inflation. It's incredible, and you can't make this stuff up, what is really happening. Right here, article in The Hedge, and I'll paraphrase, the Fed is attempting to crush aggregate demand through so-called monetary tightening policies, and the governor of California comes up with a brilliant idea to stoke even more demand through a new record of stimulus checks. Millions of Californians, and they're saying if you earn up to $75,000 or a household that earns up to $150,000, you will get a check, a gas check, for up to $1,050. And this is going to be a new middle-class tax rebate. Isn't that lovely? The governor said that there's more money in your pocket to help you fill up your gas tank and put food on your table. This is the guy, when the economy was closed, was at the restaurant French Laundry having a $20,000 meal with his friends. But he's going to give people $1,000 to fill up their tanks and so they can get more food. The relief package is a staggering, as I said, $17 billion. So to tackle inflation here in California, we're going to just drop more helicopter money by the billions of dollars. So this counters what the Fed is trying to do, or supposedly trying to do. While the Fed's raising rates, but yet buying bonds at one side, now we've got helicopter money coming into California. Absolutely incredible. People are going to spend this money on all sorts of stuff. You can bet on that. It won't just be gasoline. They'll be spending it on everything. This plan will only fuel inflation right here in the state of California. That's all it's going to do. It's not going to really do anything other than fuel the inflation problem we have here in California. So my question to all of you is, who is going to pay for this? Where is this $17 billion going to come from? I wonder who. Maybe the taxpayer? I mean, think about this. We'll pay more in taxes, and we're going to pass this money out, all $17 billion of it. So people, yes, some of it will go to the gas tank. Some of it will go to food, but some of it is going to go to a whole lot of other things too. And so we're going to have more QE here in California, more helicopter money, and this is going to just throw gasoline on the fire of inflation. I mean, this is so counteractive from what we're trying to do by raising interest rates. I mean, it's just a total disaster. Again, the Fed buying at one end of the spectrum, yet raising rates at the other, and now California is going to just give out $17 billion. How does this help the inflation problem? To me, it's going to cause more inflation. Comment down below. Let me know your thoughts. I mean, California, no doubt, they have lost their minds here. This state is done. It's just another reason why I'm leaving, and I can't wait to get out of here. Absolutely repulsive with what is going to take place here. I don't know how we're all going to pay for this. They'll just raise taxes, or they'll just slap a higher gas tax on down the road to pay for all this. Absolutely incredible what we're watching take place. Wolfstreet.com, average transaction price for a new vehicle hits record $45,844. So almost $46,000 for a new vehicle. And so these people buying these new vehicles here in California, they can't even afford to drive them at $7 per gallon gas. They're going to need their $1,000, $50 check in order to put gas in their $46,000 vehicle. I mean, this is just the twilight zone that we're living through, especially here in California. I mean, it's a nationwide epidemic without a doubt, but the way we're doing things here in California, we have the biggest homeless epidemic on planet Earth. We have a water shortage. We have a food crisis taking place. It's just incredible. We have very high real unemployment here in California. We've had so many small businesses destroyed here in California. The price to live in California, the surge in rent just absolutely skyrocketing, the surge in housing costs just skyrocketing. All this inflation that we're seeing in California, and the answer to all this is, let's just throw $17 billion at people. That'll fix things. Incredible with what is taking place. It really is. This is going to have more catastrophic effects on the state of California and on the average citizen of California. Remember, this money is coming from somewhere. It must be paid back. It is going to cause more inflation. It's going to cause higher taxes. It's going to cause higher prices. This is very, very bad. CNBC, the housing market slowdown is showing up in shipping data from China. Orders of home building construction materials such as lumber are down. Shipments of appliances are declining. And there's a major slowdown in furniture and home decoration orders coming from China and Vietnam. Record low consumer sentiment, ladies and gentlemen, across the country. And we have record low mortgage apps and record high mortgage rates, record high inflation. This is going to get so bad. I don't think most people watching this video today quite understand how bad this is going to get. And it just seems every day the news continues to get worse and worse. And There are people out there that think I just repeat the same thing. No, I just keep reporting the news, and the news just gets uglier and uglier, more negative, more concerning, more damaging, and more scary. And that's just the bottom line. But this is all fresh news off the presses today. Hottest U.S. housing markets now have bigger share of price cuts. The share of lower listing prices rose the fastest in real estate hotspots like Salt Lake City, Utah, Las Vegas, Sacramento, California. All this according to Zillow. Among 50 metros in Zillow's data, 32 had more than 10% of its listings with a price decline. This is a trend, ladies and gentlemen, that is forecasting what is coming. You're going to see a huge real estate downturn. You're going to see a real estate crash take place in America. And this one is going to be much more difficult to salvage than the one you saw in 2008. That will be a Sunday school picnic, a walk in the park compared to this one. And the reason being, the inflation now that we're going to see in America, we have a loss of leadership here in America. Gas prices at $6, $7, highest we've ever seen. The debt, $31 trillion, you name it. This is going to be so bad. And of course, we're going to be raising interest rates at the worst possible time because we didn't want to do that 5, 6, 7, 8 years ago. We wanted to do it now, and it's going to be the worst possible time for all this to take place. In this article on CNBC, or excuse me, this was on Yahoo Finance, somebody had commented down below on this article, and these people, they reside in Riverside, California, and they said that they had seen 2 houses that they had looked at previously back on the market, and both of them fell out of escrow, and they also said that the sellers are clueless, because many of the sellers are clueless because they're listening to their real estate agents who are telling them that they can get more for the house than it is worth. And if you're on the market right now with a piece of property, I hope you're using an honest and a very, very seasoned real estate agent, because too many of these agents have gotten so greedy and have drunk so much of the Kool-Aid. They are misleading their clients. They are misleading their sellers, having them believe that they can get more, that this is 3 or 6 months ago in these markets. This market is changing right now. This is not the same market from 90 days ago. It's not the same market from 120 days ago. This market is changing rapidly now. So be careful of the people you are listening to. But the sellers, you know, are brainwashed. They believe that this market is still the same market. It's all changing, ladies and gentlemen. Many of these people are not watching and paying attention to what's happening behind the scenes. They're not reading. They're not looking at the real data. They're not doing their due diligence. And if you're a seller or a buyer right now, you need to be doing your homework. You need to be doing your due diligence. And I must say this. If you are in an escrow right now, if you are looking to buy a home right now, I would highly advise against it. This is not financial advice. I am talking to you as a friend or a family member. This is what I would say. I would cancel the escrow. I would get out of it. I would bounce right now. There is no way in hell I would buy a house. This is the most overvalued housing market we have ever seen in the history of the U.S. This is the biggest bubble. And on top of that, we have multiple bubbles all at the same time. And you just saw, again, what happened to this market today. The volatility, they're in big trouble, ladies and gentlemen. The Fed is stuck. They are cornered in a box. They can't get out. And either way they go, this is going to be very, very bad for the U.S. economy and these markets. The administration bans Russian gold imports. Another article today. This was on Fox Business. And look, I'm not going to get political. I'm not taking any sides. Russia, Ukraine, whatever. I'm going to call it the way I see it. This administration bans Russian gold imports. Okay, like Russia cares. Russia is just going to sell that gold to other BRIC nations. They're going to sell it to India. They're going to sell it to China, just like they're doing with their oil. I don't think that all this is working out like the U.S. intended. Russia is getting richer, ladies and gentlemen. Reuters today, a default when flush with cash, 5 signs Russia ain't sinking yet. Number 1, oil. This is the lifeblood of Russia. High oil prices are making Russia very, very rich. They are the second largest oil exporter, second only to Saudi Arabia. They're also the world's largest exporter of natural gas. Let's not forget fertilizer too, right? How about food? No panic in Russia for food. The store shelves are stocked. They're stacked to the ceiling with food. They have no food issues. They produce massive amounts of food. How about unemployment? They have a record low 4% unemployment. And I bet that record low 4% unemployment is not nearly as manipulated as our 3.6% or 3.8% unemployment number here in America. How about interest rates? Russia cut its interest rates, get this, to a pre-crisis level. Just cut the rates to 9.5%. And guess what? Inflation has slowed in Russia. Think about that, 9.5%. If you had money in the bank, you'd be earning serious interest on your money. If you had bonds in Russia, you're earning some serious money. So no problem with interest rates, no problem with inflation because they actually have real interest rates. Strongest currency in the world, the ruble. How about that? It is performing better against the dollar than any currency in the entire world. This is what really scares me. So much happening with China and Russia behind the scenes. They are stockpiling so much gold, ladies and gentlemen. And sooner or later, somebody is going to back a currency, not maybe 100%, but what if they backed the yuan or the ruble with 20, 30% gold? What would happen? This would be a game changer. Tell me that most of the world wouldn't want to be holding a currency backed by some amount of gold. Things are happening. Things are going to change in the next couple years without a doubt. And this is why I highly advise all of you hold at least some amount of gold and some silver. People still ask me all the time where I buy from, what's a reputable place? SD Bullion. I have a link down below. You can buy gold, you can buy silver from SD Bullion. I've been buying from them for over 3 years. Solid company, competitive prices. They're the biggest, and I have nothing but great things to say about them. I don't care if you buy gold and silver. I don't care if you do, you don't. I don't care where you buy it from. I just believe these are real assets you need to be holding right now. And these are the most important times to be holding them. I believe you should be holding cash. I believe you should be holding some gold. If you can't afford gold, get some silver, some real estate. That's where I believe, that's where I'm at right now. That's where I'm at. And I believe that's the safest place to be right now. You have to be defensive. This is not the time for speculating. So I truly do believe that you got to be holding something real like gold, physical, ladies and gentlemen, and put it in a place you can get to. I think it's imperative that you own some of this right now. I personally know some people very, very close to me sitting on piles of cash, and at some point cash becomes risky. And I think there's a lot of people out there sitting on a lot of cash, and you begin to think like, hey, this is really losing a lot of value, a lot of purchasing power. Yes, you need it for sales. You're going to buy some real estate or you're going to buy into these markets, you need some cash. But remember, gold is liquid. If you need to turn it into cash or any currency, you can do it pretty quickly. But just to have a big pile of cash just sitting there, I think is dangerous. And that's why I personally moved a portion of that cash into gold. So it preserves that wealth. And many of my friends have done that. And so I see that many more people are beginning to see that. And they're beginning to see the importance of holding real things, the importance of holding gold, the importance of that 5,000-year history, because we're all watching what the central banks have been doing over the last decade, stockpiling massive amounts of gold. We've been watching China, we've been watching Russia, massive amounts of gold. All that gold, China mines more gold than anybody in the world, and none of their gold leaves. It all stays in China. They import gold, they mine gold, it never leaves China. So just watching what the big players are doing. I'm not listening to what people are doing. I'm watching what people are doing. I'm watching what nations and central banks are doing, and that's why I own gold. But you have to make up your own decisions, do what's right for you, do what makes you feel safe. Me personally, I sleep very good at night knowing that I have a lot of my wealth in gold. Another article today, most Americans are concerned about their ability to afford day-to-day things. They took a survey, and in this survey it said 73% of Americans are concerned about their ability to save money. Well, when you look at the savings rate of 4.4%, and that's probably declining, and inflation going up, it's eating away your ability to save. And this is why I think we're heading into a massive depression, because people have no money. They have no savings. They have no assets. Many people don't even really have a real skill set at this point, and they're completely unprepared for an economic downturn. And these people are going to lose their cars. They're going to lose the toys. They're going to lose their homes. Many people are going to lose anything they have in their 401k or their pensions. And this is going to be just a tsunami of destruction. And this is why I think that this recession is going to turn into a depression. And arguably, you could say we're even in a depression right now when you look at the numbers. 70% are concerned about their plans for retirement. How many people believe they're actually going to be able to retire ever? I mean, I think most people are going to have to work into their 80s if they want to eat. 75% say that the economy is fair or poor. This number is going to get much larger. 65% in the survey are concerned about their ability to afford day-to-day things. 66% said they're concerned about their ability to take a vacation. And I'm going to close right there. Let's talk about that briefly. If you have no money saved up, you do not need to be taking a vacation. Do not do it. I know people on the other end of the spectrum who don't have a lot, don't have much saved up. Maybe they have $500 saved up. Maybe they have $5 saved up. They don't have a whole lot, but they always take a vacation. Every year they'll take a vacation, and they have no money in the bank, and the money that they might have in the bank is what they use for the vacation. So when they come back from vacation, they have zero money or they're negative. You're better off not taking a vacation. Maybe your company will pay you, give you your vacation pay, and you work that week. And so that way you make 2 times that week. That's what I used to do when I was younger. I would never take a vacation. I would just say, I'm going to work that week, pay me, and give me my vacation money, and that's it. And that's how you save. That's how you get a little bit ahead. But so many people will just say, well, I have to take a vacation. I have to have balance. I have to spend time with my family. Look, if you're broke, you don't have that luxury to take a break. You don't have that luxury to spend a week with your family on vacation. Sorry, you need to work and save up money, because you have to realize what is coming. There are so many people out there right now capable of working a lot more, and they won't do it. They'll work their 40 hours a week. That's it. That's it. They're not going to work 50. They're not going to work 60. They're certainly not going to work 80. And I'm sorry, if you want to save money, if you want to get ahead, if you want to have success, I don't care if you work at a sandwich shop or you change tires, you change oil. You're never going to get ahead working 40 hours a week. You got to think outside of the box. You got to go get a side hustle. You got to work extra hours. You got to really hustle right now, ladies and gentlemen. There's no other way to put it. You got to hustle. It's not fun. It's tiring. It takes time away from the family. But you got to protect your family and yourself from what is coming. And what is coming is an economic tsunami. And it is going to be so destructive. And the people who have very little or no money, they're done. There's no way they're going to be able to afford to ride this out. They don't have the necessary gear, the necessary assets right now. Most people that you know and I know have absolutely no food put away, maybe 2 days of food, maybe. And they have no way to protect themselves. They might have a case of bottled water. They have no emergency kits, no trauma kits. I mean, ladies and gentlemen, we really better be under the realization of what's about to happen. Could it happen next week? I don't know. Next month, next year, who knows? It could happen 18 months from now. It could happen 2 years from now. It could happen 2 days from now. Nobody knows. But one thing I know, and most of you know, is I would rather be prepared right now than to try to prepare once it happens. Because if you think you're going to go out and buy gold and silver, it's all going to be gone. You think you're just going to run to the store and the shelves are going to be, stacked to the ceiling? Good luck. You think people aren't going to be fighting in the parking lot for a case of water or a loaf of bread? Imagine how risky it could get out there on the streets of America if we begin to see inflation really get out of control. We begin to see the food shortages really develop into something that cannot be denied when you go to the store. Yes, sometimes you go to the store, the shelves are a little bare, but most of the time they look pretty good. Imagine going when 40, 50, 60% of the shelves are empty. Or you go and all the shelves are empty. Imagine, you don't want to be out there, ladies and gentlemen. You don't want to be out there. So make sure you have, extra candles, extra batteries, extra propane canisters. Make sure you have a way to cook your food. Make sure you have a way to filtrate your water. These are all things we have to be thinking about right now, because today was another reminder in these markets that they're in trouble. And yes, they could reverse course. I dare them to. You want to see hyperinflation come to America. You want to see the world lose complete faith in the US dollar. You want to see the economy really spiral out of control. Reverse course, lower interest rates, and start printing a bunch of money. And you're going to see exactly what I'm saying. I dare them to do it. People think that that's the easy fix, that the Fed's just going to stop and reverse course and, everything's going to be fine. The markets will go back up and everybody's going to go to work and, everything's going to be fine. It's not going to happen that way, ladies and gentlemen. I dare them to reverse course. You're going to see Zimbabwe and Venezuela right here in America. That's exactly what you're going to get. You will get hyperinflation. You will see America spiral into a third world country if you reverse course. And if the Fed keeps buying bonds and raising rates at the same time, they are going to destroy the economy and the dollar and cause hyperinflation all at the same time. I'm going to leave it there. Incredible time to be alive. Nobody knows what's going to happen tomorrow or the next day. I mean, this thing is so out of control. I don't even think the Fed knows now what's going to happen. I think they have completely lost control. And that's why you now need to take control and take action and prepare for what is coming. It's getting very close, ladies and gentlemen. God bless, stay safe, and I look forward to speaking with all of you very, very soon.